What are the top economic risks for 2022? Well, our chief equity strategist and economist, John Blank, is here now to give his assessment. John, you wrote recently cybersecurity was the top risk in 2019, stayed at the top in COVID times 2021, and maintains that position for business, especially in 2022's post-COVID environment. That's even ahead of the supply chain issues. Why do you think that is?
I think it's clear that people are working from home, and whether you realize it or not, you're working from home and connecting into your business and corporation, and that's creating cybersecurity and data privacy issues for both you and your company. And there's a group of firms, I'll throw names out there like Qualys, Radware, Cloudflare, Palo Alto Networks. These types of companies are making a mint in securing those networks.
What are the other top risks to our economy for the new year that you see?
The other ones are talent management and issues with suppliers. I mean, again, we've yet to get all of this ironed out of how getting people back in from shutdowns and reallocating and finding ways to keep people happier and working in new arrangements. And we also still have issues with the supply chain to work out. So those will continue to play a role. And I'm sure we'll see as the 3.5% employment rate comes even closer, and we'll get even more people off the sidelines, and that'll create even more issues.
So do you think managing these risks are going to be more challenging to companies or to the workers?
I think it's going to be mainly up to the workers to make themselves happy, but I do think better companies will get better bids for better workers, and that's the point for companies to realize is their culture, their management abilities that get advertised in private and public ways in the marketplace will really matter in this environment.
What about the global economy?
The global economy is a big, big question mark for next year. I think the stock markets outside the global U.S. are probably looking pretty good. The global economy does not have to follow in sync with the stock markets. And so it remains to be seen what happens out there. But I generally think the United States economy will do better than the global economy next year.
In an economic commentary, you list one risk as economic volatility. What does that mean?
What that means is that, we get more disruptive environments with supply chains, with COVID, and with prices and inflation particularly. I mean, you got to remember that when we're in a high inflation environment, we're letting the price system manage out imbalances in supply and demand, and that is economic volatility when there's an imbalance between supply and demand.
So let's look at inflation a little closer. As that moves higher, is that going to be a major challenge for both business and consumer?
Well, it has likely peaked right as we speak here at the end of 2021 with holiday shopping somewhat behind us and some of the supply chain issues working themselves out. So I would expect the data to take a few months to catch on to this, and that the market itself will have looked beyond it well before the data turns.
Then there's the great resignation in the labor market here, and that doesn't seem to be abating as we speak. Is that going to play a role in stalling the economic recovery?
I think it's going to change for a lot of people who are retired. Their roles in the retirement market. I think for the rest of us, it probably would be a non-starter because we still got to work and we still got to make incomes, and we'll still find ways to do that in hybrid ways, which we've already learned how to do. So I think the major structural change in the labor market is probably behind us.
All right, let's look into the largest semi stocks on our Zacks #1 rank list as we speak. Infineon Technologies, Xilinx, and ON Semiconductor.
Yeah, let's talk Infineon first. I got a PEG ratio to 1.1. Very strong look because its growth rate's 20%, but its forward P is 23, so not overpriced given the growth, and it's got a nice pullback from around $50 to $44 a share. Infineon as a semiconductor stock, very attractive once this pullback is underway and has turned the stock. I would keep that well on my radar. We got Xilinx, which is a much pricier stock. It's gone from 230 to 200 and a forward P of 49. This one I know very little about, but I would be very worried about a stock like this with that much high of a forward piece. So I would probably stay away from Xilinx. And on semiconductor, this stock price has held up. It did a massive run from 42 to 64 from November, December. It has not sold off. Forward P is only 22. I got to figure all the good news is priced in here. I am and was a profit taker on the stock for the portfolio I ran for Zacks, but it's probably not overvalued at this point. So we've really got three different situations. Infineon, which looks somewhat attractive, Xilinx, which is probably got a ways to go, and ON, which is probably in line with its expectations.
Chief equity strategist and economist John Blank looking ahead to the economy in the new year. And we hope you have a happy holiday season and prosperous new year. We'll be back with John in 2022. With John now, I'm Terry Ruffalo. Here's something for you to check out, an offer for a free book, Finding Number One Stocks, a 300-page hardcover where Zacks Executive Vice President Kevin Matras reveals almost every stock-picking secret he's learned from the system that since 1988 has more than doubled the average yearly gain of the S&P 500. Find out more details at Zacks.com/promo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.